Hi everybody, and welcome to a brand new episode on investing. In today's episode we want to take a look at how you should evaluate ETFs and mutual funds if you're a non-US investor. This is very different than if you're a US investor, and I'd like to point out some of the things that you need to watch out for as you're considering certain funds to invest. Now before I continue, if you're new to the channel, please consider liking this video, subscribing to the channel, or sharing the video with friends and family who would be interested in this topic. Now, without any further ado, let's jump right into it. In the previous episode, we talked about going to a site such as morningstar.com to evaluate funds and look up some of the basic information that you need to consider in order to understand what that fund is comprised of, what is the asset allocation, what are the fees, etc. Now, if you're a non-US person, you technically cannot invest in some of the funds that I mentioned last time. That is, funds like Total US Stock Market, the VT-SAX Vanguard fund. You can't actually invest in that. And if you want to find some alternatives, you need to look those up in Morningstar. However, because you're a non-US person, the US site will not let you look up non-US funds or equivalents of the VT-SAX. So for this purpose, what I can advise you to do is go to the, for example, UK version of Morningstar, which is morningstar.co.uk, and here you can actually look up the funds that are available to you as an international investor. So one fund to consider, again also a Vanguard fund, to continue with the Vanguard theme here, is VWRD. Now this is a fund which is called All World ETF. It's an ETF and it's listed in the London Stock Exchange. If I pick this fund, I'll get similar details as I did on the US Morningstar version of the site. However, what you'll see is that this site looks a little bit different. The menu is laid out in a different way. So on the left hand side, we've got the menu with the different sections, and then we've got a couple of different sections as well. So rather than looking at tabs that are across this page, we're looking at a menu type of layout where I can pick the different sections of interest. In the overview page, what we will see is some of the key stats as they listed out here that are important for you to consider. The very first thing that I'm going to look at is what is the expense ratio. For me, that's a critical attribute that I need to examine. And in this table, it's not called an expense ratio, rather it's called an ongoing charge. And the VWRD fund, or ETF rather, is 0.25% yearly ongoing charge. The next section I would focus on is look at the actual portfolio. So I want to see what that particular fund holds so I understand what I'm investing in. And if I click on the portfolio menu item from the left, I get immediately very useful information. Upper left hand side here, it tells me what is the investment style. So that's the map of the type of investing that Morningstar categorizes its funds, that tell us what is the fund in terms of large, medium, small, or whether that fund is basically a value fund, a blend fund, or a growth fund. I can see that the majority of the companies that are part of this ETF are 51% are giant companies. So we're not talking about just big companies, but giant companies. About 34% are large companies. We got exposure to medium companies and not much of small and micro companies. So that gives us an explanation of why this fund is classified as a large blend fund. Mostly it's comprised of giant and large companies, and there's some medium companies. If we look at the actual portfolio of holdings, so we need to scroll down a little bit on this page and see what is the actual breakdown of the assets. So if we look at a little bit further down, there is the world regions. Biggest chunk of this fund is actually the US market of about 54%. Then we've got representation of Canada, Latin America, UK, the Eurozone as a whole. We got Asia, different countries within Asia. So it's really a globally diversified fund which holds pretty much what we call the market cap weighted representation. Now, if we consider another type of asset allocation in terms of is it stocks or bonds, we will see slightly up, going up. There's the asset allocation tab of this table where we clearly see that it holds 100% stocks. There is no bonds, there's pretty much no cash in this particular fund, so it's strictly a stock type of ETF. The next thing I would like to examine is what is the fund's performance. There are several lines which represent one, the fund, the VWRD, one which represents the index, and one which represents a similar type of fund as a large blend. It's good to look at the category or the similar fund, that's okay, but what I'm more interested in how the VWRD fund tracks the actual index, because I'm buying this fund because I want to get the benefit of owning that index. And if we look at the chart, the fund is tracing very, very closely the index, and that's what we want to see. That means the ETF is performing really well and as per the expectations. Now, there is also additional useful information in this very page as well. We can see the different numbers per year of, again, category versus index. That's great. You can examine those, and especially you want to take a look at longer time periods, how the fund is performing. But I would focus your attention also on the trailing returns. So you can take a look at 1 year returns, 3 years, 5 years, up to 10 years is what Morningstar lists. Now, how would you evaluate this fund against another fund? Let me talk about this. One of the greatest things that you can find on the Morningstar website is listed under tools. So if I go under the tools tab, there is a tool which you can use to compare different funds or investments. And it's in this bubble here. If I click on investment compare, that would allow me to add 1 or 2 or more funds to compare them side by side. And we're looking at the VWRD fund ETF. So let me type that one again. So I want to add as one of my ETFs to compare. And then I'll add a second one, SWDA. So if I click on the SWDA, we'll pick one of the selections here. We get a side-by-side comparison of those two funds. So you can look at the key information, things like when is the inception of the fund, so if you look at VWRD, it was created in May 2012. So as you can understand, it didn't have the 10-year figures for returns. But if we look at the SWDA, it was created back in 2009, so we will have those values. What else? We see the ongoing charge. Again, that's the thing that I'm most interested in, is the ongoing charge. The VWRD is 0.22% as per listed here. The iShares equivalent fund is 0.20%. So it's a little bit cheaper than the Vanguard fund, but mind you, those are negligible differences. So sometimes you may have other considerations as you're evaluating those two funds. We see also their investment style. So there is a mini map of their investing style. As we saw, the VWRD was a large blend. Here it's listed as a large value. I wouldn't quite agree. It's a large blend, as well as the SWDA is also a large blend. So both funds are pretty much in the same category, and they would give us similar returns. You can look at additional information that is listed here. Again, I'll jump into the portfolio section because that's important to me. I want to make sure that they're both investing into the kinds of funds I want to hold. And if we stack them side by side, we'll see that yes, indeed, both of them are pretty much stock only. The SWDA has a little bit of cash reserves, but overall it's 99% stocks. So that's exactly what I'm looking for. If we go down in the geographical breakdown, also by sectors, we can see how they're similar or they differ. And these are the things that could tip the scale of one fund towards the other. But I can summarize that they're both pretty much the same kind of exposure. The percentages of asset distribution, they differ a little bit, but it's negligible. I don't want to get into the nitty-gritty for all, for this discussion. I think it's sufficient to say that they're very similar funds, similar cost ratios, similar exposure to the total world market. So they're very good, high quality ETFs to invest in. Now, what if we wanted to look up additional information beyond the Morningstar? For US investors, in the last episode, I showed what that looked like on the Vanguard website. Now, how about we take a look at one of the iShares and look this particular fund on the iShares side. So what you will have to do is you want to switch to the iShares.com, particularly to the UK side. Now, if you're based in another country, you can switch this to whatever is your local applicable site. I only understand English, so I'll go to the UK side so I can read that and point you to the right information. But if we go to the UK side of iShares, I can look up that same fund of SWDA, and if I click on that fund, I'll get presented with the usual information that we already know now. Things like the overview, what is the performance, what is the portfolio. It's just that on this site, they may use different labels of the sections. For example, they don't call the section a portfolio, but they call it holdings. It's the same thing. And if we scroll down on the iShares website, everything is technically one page. So if you continue scrolling, all these sections will be sort of revealing the different information to you. For example, we're starting off with things like performance. You can see how the SWDA fund performs. You can look at those numbers and basically say, okay, for the last year, this is the total return, or this is the dividend, or whatever the case is. And you can play with things like cumulative, calendar years, etc. So you can take a look at that. Now I want to scroll down further because to me, the thing that I really want to start looking at is the key facts. So these are the most important measures of a fund that I'm evaluating. And probably I'm not looking at all of them, but let me highlight a few. Again, I want to start with the expense ratio, and you'll find the expense ratio listed here on the iShares website as the total expense ratio. And you see it's 0.20%. Another important thing to consider is that the fund is domiciled in Ireland. Again, if you're a non-US investor, and I want to stress that, you want to pick up funds and ETFs which are non-US domiciled. That's for tax purposes and all kinds of considerations that are part of probably another episode as soon as I get to it. But you want to focus on things that are based in Ireland or in any other country which is beneficial from tax purposes to your particular country and your particular tax considerations. Typically, many non-US investors, they pick out ETFs which are based in Ireland because that gives them the best tax efficiency. What I want to point your attention to is the distribution frequency. In this case, the distribution frequency is none. That means this is a non-distributing fund. For non-US investors, as you pick out funds and ETFs, you will have to pick either a dividend distributing fund or an accumulating fund. A distributing fund is a fund which every quarter or every 6 months distributes dividends as part of it holding that fund. And those dividends are paid out to you. They land in your brokerage account as cash dividends, and then they get taxed as per whatever your country taxes dividends. As a non-US investor, you have to make up your mind which one is better for your situation, depending on if you're just starting to invest or depending on the country that you live in and based on the tax laws that you have. Let me explain the two considerations. From a tax perspective, dividends are generally taxed at a different rate than capital gains. And in your country, dividends may not be taxed. So dividends may be free of additional tax that you need to pay. Or the other way around, capital gains may be taxed, but dividends may not be taxed. So this can be a consideration for you whether you want to have a dividend distributing fund. You may also be in a situation where dividends need to be declared in front of your tax authority, and you may need to submit documents that show how much you've made this year out of dividends. In this case, it may be beneficial for you to hold dividend distributing funds so you can clearly show your tax authority that this is how much you've made from dividends this year and this is what is the tax you're supposed to pay on those. On the flip side, the other alternative is to hold accumulating funds, and this is what this particular fund that we're looking at is. It's an accumulating fund, and you'll see this in the section of use of income, and it says it's accumulating. Accumulating fund basically means that it does not distribute dividends every quarter or every 6 months. Rather, the dividends in a way are hidden or they're virtual, and the amount of money that the companies distribute, they're actually used by the fund to reinvest those dividends automatically. So you don't get them in your brokerage, you don't see them deposited back to you, but rather the fund automatically reinvests them within the same fund. So your fund holdings are growing and your portfolio is growing, but you're not seeing the cash dividends. If you hold an accumulating fund, you will not have to pay additional brokerage fee to buy or reinvest the dividends because those are done automatically for you, so it comes in a way as a free of charge to you. Also, if you're in your early 20s, early 30s, or early in your investing career and you're trying to accumulate wealth, you would definitely want to be reinvesting the dividends, so you definitely want to be growing your portfolio. So in this case, it makes sense to hold an accumulating fund. On the flip side, if you're closer to retirement and closer to the age where you want to reap the benefits of your investments, you may basically say, I want to have a distributing fund because I want to get the dividends. I want to take out the dividends as cash and use them as my daily expenses. So if you hold a dividend distributing fund, nothing is automatically reinvested on your behalf, but rather the money gets deposited as cash to your brokerage account, and then you can simply take that money out and use it. So that's just a couple of aspects to consider between distributing and accumulating fund. I'll probably create a separate video on that because there is several considerations to be made. As I mentioned, the main things are age and if you're in accumulating phase or whether it's tax purposes, but for different countries it differs quite a bit, and this is as much as I would get in this episode on these. Just be aware that this is something you need to consider based on where you live and based on your age potentially. So to sum up, in today's episode we talked about what you should consider as a non-US investor, where you can go and look up funds. Again, Morningstar is my site of preference, not because I'm biased, but it just gives me an objective view of multiple fund families. It has the tools such as the Fund Compare, and I can look at all kinds of information such as how the fund performs, what is the portfolio breakdown, what is the expense ratio, and other key facts about the fund. We also talked about how to decide between a fund, whether it's accumulating or distributing, because that's an important factor for you. And we also talked about domicile, whether the fund is based in the US versus Ireland versus maybe another country where it's more tax beneficial to you. So if you like this video, please like, comment, subscribe, hit the bell notification button every time I release a new video so you'll be notified. And in the next week's episode, we're going to talk about another very, very important topic, and that is whether you should invest in international funds. This means something totally different to a US person versus a non-US investor, and I'll cover both of those, so stay tuned. Until next time.